Hello, and thanks for joining us. My name is David Penn. I'm a research analyst with Finovate. We're here at FinovateEurope, and joining me is Victor Alexiev. He is the Global Head of Venture Investments and Partnerships at Citi FNS. Victor, great to have you with us.
Pleasure to be here.
Fantastic. I thought maybe we could start off, if you could tell us just a little bit about what you do at Citi FNS.
So we run a program called Sprint, which is a strategic investment vehicle embedded in our financing and securitization business. We essentially invest equity in fintech lenders, prop tech companies, and infrastructure businesses, which is software companies that underpin the credit value chain. And we do that with a clear strategic and commercialization focus.
Very interesting. We're going to talk quite a bit about that here in a moment. I thought the first thing I would want to ask is, talking about fintech trends more broadly, what would you say is the biggest fintech trend that's happening in lending right now that people are underestimating?
To me, that would be technology-enabled and a mindset shift-enabled move from ownership to access. So you can think of it as, for example, from a consumer perspective, a lot of times you see how the relationship to the assets that you have, so for example, be that consumer electronics or your vehicle, have moved from I own this to I get utility out of it and I'm paying for access, where the servicing, maintenance, the insurance, software, all these stuff is bundled so you have less friction. And we see that also in things like, for example, equipment finance as well. So now you have businesses fundamentally not necessarily buying the productive assets that they need in order to do their work, but subscribing to them.
Right.
And this is a very interesting shift because it changes the way you model risk, it changes the relationship. So especially with equipment and asset types that have mobility, which means you can move them around, that have short technology upgrade cycles, which means you don't really want to replace it very frequently, you want to be most up to date, and which have sort of say established secondary market where you can have a residual value priced fairly. You see more and more of that shift happening. So to me, that's very exciting as a trend. It's also good from a sustainability perspective, if you think about it.
Yeah, that's a very good point. And it's a really interesting trend that I think a lot of people might be recognizing in terms of their actual daily lives and not really thinking about it and realizing the shift that's happened. I know we've had a couple of companies come through here at Finovate demoing that have been engaged in a lot of this type of lending, and it's really been something I think has really captured a lot of our audience. Another question I'd like to ask sort of similarly is, if we look ahead a little bit, maybe 3 to 5 years, what are some of the developments in things like private credit, fintech lending, and banks' role in all that ecosystem? Do you think they're going to surprise people down the line?
Yeah, I think 3 to 5 year forecasts are pretty difficult and not, especially in this day and age.
Absolutely.
But I would say that one of the things that I'm expecting to play out is that we're going to see a lot of pervasive embedded of lending services, other financial services as well, but lending in particular, and the risk assessment and underwriting process that's essentially related to it, into customer journeys, user journeys, that is invisible, that makes the fundamental institutional component of it hidden behind the scenes of a product. Now, of course, that will be declared and it will be regulatorily compliant.
Sure.
And I think that there's a lot of questions to be answered in terms of, as you see emergence of agentic workflows and the potential interface of interaction, the platform on which you interact change towards more conversational AI, what that user journey is going to look like. But I definitely predict that the notion of I'm going to go to a financial service provider to get my financial service needs serviced is going to shift. You will be embedded in the workflow of getting something done where your need for financial services emerges, and then who knows what dynamics is going to play out from an actual experience point and competitiveness point.
Yeah, well, it's truly a brave new world with the embedded and lending combined, and things that people are really going to have access to. I want to talk a little bit more about investments, the type of things that you invest in. Right now, I think most people would say the consensus is AI, digital assets, super popular, getting a lot of attention, getting a lot of support. I guess I'm curious, beyond that, the rest of fintech, how are they faring in terms of their attractiveness to VCs? And then maybe subsequent in terms of once these companies are invested in terms of their exits, in terms of a successful outcome. I know it's a bit of a big meal to take in one question, but what do you think?
Yeah, obviously exits, M&As, IPOs, that has muted for a couple of years. I think we're seeing some comeback towards the end of last year and the beginning of this, and I'm hopeful. But broadly, you're right. Venture capital, to a certain extent, has retrenched from certain segments of VC. But that's not equal across the board and across different product lines, across types of VC. but also across geography. So, for example, in Middle East, in Africa, in certain parts of Asia, we see different types of activity. Another thing that for me is, for example, very surprising and relevant to the work that we do is that you see how, especially in narrow product aligned opportunities or ventures, the shift of financing has moved from traditional returns motivated VC to strategic corporate venture capital. So firms like us. So and that's kind of like related also to the trend that companies, corporates are investing more focusedly into their ecosystem with an idea of commercializing, with an idea of accelerating their own digital transformation, with an idea of fundamentally adopting and partnering with some of these companies that live in their portfolio. So essentially for areas where traditional venture capital has retrenched, you see, especially for relevant and kind of viable businesses, corporate venture capital come in. And then on the other side, like your comment around focus on, for example, AI and payments and things like that, and digital assets, it's essentially a search for returns, right? The incentives for returns-based financial VC is to look for heavy multiples, right? And so those are the areas where they see that opportunity because that's where the attention is.
Yeah, excellent. That's a very good explanation of that. Thinking along those lines, I'm thinking about companies, banks, for example, that are moving from what you might say an experimental stage to a more selective partnership stage. And I'm curious how that transition on their part makes or changes their attractiveness and their fundability, for lack of what I'm putting it.
It's an astute observation. I would say that after a period of withdrawal and contemplation post-COVID, where I think there was an assessment of, okay, rates are not what they were, capital is more expensive, we do have a lot of digital initiatives coming to fruition and maturity. Banks, financial service organizations, I think they've matured in their approach to innovation. So right now the focus is less on dispersion and experimentation. It's more on deployment and scale. Right. And so the way they look at the companies that they partner with and they invest in is more focused on things like, for example, is this a product market fit that I can recognize and work with? Is this a company that has a verified and validated business model? Is this a company that's integratable, regulatorily compliant, and fundamentally can scale with me and my needs, whether regional or globally? Right. And all these things point to another question, which is very important for large financial institutions: survivability. Right? You don't want to build dependency on a distribution channel or on a key technology when your biggest question is, will these guys survive the next winter?
Wow, interesting challenge. I'm curious, maybe a way of wrapping things up, we've got a lot of different things going on here at Finovate Europe in terms of different sorts of companies on stage, different sorts of speakers. Has there been anything that you've seen so far, we're only into day one here, but has there been anything you've seen that sort of either surprised you or sort of caught your eye, either from the demo stage or from the speakers?
Yeah, I didn't get a chance to attend the demo stage, but one of the things that I've observed from talking to attendees and listening to some of the speakers, there is a lot of focus on AI, like how do we digest it and fundamentally break it down in ways where it's digestible for the financial service industry as a whole. So there's a lot of integrators, niche service providers that are focused on essentially on picking a specific use case or vertical, which is, I think, the right way to go. And it's a pretty vibrant and dialogue-driven community. So I'm pleasantly surprised.
Yeah, very good, very good. And hopefully you'll be able to spend a little bit more time at Finovate, see a few more interesting things, and be able to check in more about that.
Absolutely, with pleasure.
Fantastic. Well, again, thank you very much for sitting and talking with us, helping us understand and navigate this really interesting but ever-changing terrain. It's really great to have somebody who really is very much steeped in it to let us know what's going on.
Thank you. It's been a pleasure.
Thank you very much, and thank you.